If you thought everything was calm, everything was predictable in the life that we lead, you're palpably mistaken. So as of today, we had an update, a very good update in terms of positive news, in terms of our friend Rishi Sunak announced an amendment to the job support scheme, which starts on the 1st of November. He announced an upgrade, if you can call it that, on the self-employed grants, announced more money going out for cash grants, money being distributed to local authorities. So I thought, what better thing to do than to come on tonight before I go home and just give you the bare bones, a quick overview about what the changes in the job support scheme are, what the changes in the self-employed grants are, a reminder about some of the support mechanisms that exist to support businesses, both sole traders and companies, through this interesting time, shall we call it. So hi folks. My name is Mahmood. I'm an accountant by qualification, by experience. I run two businesses based in the wonderful city of Leicester. We've got a client family which extends from sole traders up to sort of large companies there, and all those companies in different shapes and forms, not just our clients, but other businesses that we come into contact with, are basically getting their heads exploding with a volume of changes on the job support scheme, the old job retention scheme. There have been about 140 changes in that since the scheme was introduced in March. So my role is today to try and cut through the fog, try and give you some clarity in what's going on, and to actually help plug that into your business. For those of you coming onto the replay, thank you for coming in and spending some time seeing what's going on. If you type in hashtag replay, I'll be able to pick up your comments. If you've got questions that you want to ask me, then obviously put them in the comments box, and I will do my level best to answer them immediately. If not immediately, I'll still answer them certainly in a very short space of time. Just in terms of a bit of housekeeping, if you wish to call that, I'm not going to drown anyone in death by PowerPoint, but I've got some slides just summarising some of the key themes that we're going to be covering in this broadcast. That's as much an aid memoir for me as it is much to actually remind ourselves what's going on. If you want to get behind some of the numbers, if you want some illustrations that you don't quite get off the screen, I've updated the guidance on our website. The website address you'll see in the top left-hand corner is www.proactiveresolutions.com. If you go over to the news section, there's some information, not just about the job support scheme, but about other areas of interest for businesses, again, irrespective of size, that's going to help you sort of navigate not just the pandemic, but also just running your business in general. Okay, so that's enough for me. Let's crack on with the broadcast. Now, if I can make this work, should do here. I will, as a little forewarning, by the way, obviously this was only announced earlier on today. So in between sort of helping clients and sort of normal day job as such, I've done the best I can to translate all the guidance notes that I can grab my hands on, distill them into some common sense. So as we know at this stage, like anything that's government related, the devil will be in the detail. So as the actual detailed guidance comes out in terms of how to physically do a claim, eligibility checks, etc., it may shape slightly what I'm telling you here, but effectively this is my best grab of what I could have read from HMRC, the Treasury, and all those other wonderful Gus bodies here. My job is just to filter that into a digestible format. So like all these things, devil is in the detail, and we will certainly reveal that detail as it comes through. Now I'm going to focus first of all on the job support scheme mechanism, and if I can actually make this work, just talk amongst yourselves for a minute or two. You ever got those mice that they've got the unbelievably long leads? And I'm going to click that in there, and there we go, as if by magic. Now, critically, as I've said on previous broadcasts when I publish blogs and sort of share information with a business audience out there, knowing what the rules are, knowing what the numbers are, is part of what you need to do in your business. Absolutely critical. It can be really, really easy to get yourself sucked into an overwhelm, get yourself sucked into, I've got no idea what's going on. Okay, and you really need to have, as most business owners do have in my experience, a good, strong mindset, which means it doesn't mean you have to be happy, clappy all the time, but you've got to go in this with a degree of business resilience. You've got to go into this with a degree of optimism, and ultimately you've got to basically come up with a plan. I'm certainly going to guide you through some of the detail of the schemes and how that works, but you need to blend all those and actually put that into your what I call your business story. And ultimately, you need to produce as a bare minimum, beyond everything else, doing a cash flow story of your business. Certainly where we are now, I would certainly, as a bare minimum, do a cash flow story for at least 6 months ahead. Ideally do it for a year, and depending on what those numbers are telling you, depending on what your business story is saying, depending on what the cash in and out is saying, then you need to take decisive action sooner rather than later. So that's setting the agenda, so to speak. Now let's have a look in terms of the job support scheme. Now the job support scheme officially starts on the 1st of November 2020. It runs for a 6-month period. I will say initially, by the way, because effectively going back a couple of months, we all thought furlough was going to end at the end of October, and that was it. Public pressure, uncertainty has continued such that obviously the job support scheme came in. There's been effectively 2 variations on the job support scheme. One I literally talked about a few days ago, and as of today, that scheme has changed for the better in terms of financial support from the employer, brackets government, and the employer has to contribute far less into the scheme, and the actual qualifying conditions, which I'll talk about in a few moments or two, has also been much gentler. So it starts on the 1st of November 2020 and it runs up to the end of April 21. What's going to happen after that? I think it's too far away to say, but effectively look at this as the next 6 months. Now there are 2 schemes as far as I'm concerned. They share a lot in common in terms of the criteria, but where they differ is the level of contribution required by the employer and the level of government support that's provided. Now fundamentally, I'll call this Furlough Mark II, but it's called the Job Support Scheme. Here's the 2 variations. Where you have an employee who's not working their normal hours, the normal regular hours, because obviously demand has been affected, business is quite challenging, and the income coming in doesn't quite justify the payment of those wages. There may be other reasons to obviously pay to keep people on here. The schemes are designed to not make people redundant. Now the 2 schemes are as follows. I'll call it Scheme 1, okay, let's be really original, and I'll call the next one Scheme 2. Now under Scheme 1, what has to happen is that the employee must work a minimum number or minimum level of their regular hours. And those regular hours under the new scheme, again announced literally today, is 20% of the normal regular hours. Now, if you're sitting at home thinking that's fantastic, Mahmood, show us some numbers so we can see what happens, then obviously I'm going to show that to you in a few minutes. Now, the first scheme is if somebody works regular hours, let's say a 5-day week, then if they've got to work at least one of those days, and they're actually on furlough for the remaining 80%. The previous scheme, for what it's worth, by the way, because some sites haven't been updated, was that you had to work a minimum of 1/3 of those hours, or 33 1/3%, if you want that in new money. So now you've got to work a minimum of 20% of those regular hours. Now that can apply, by the way, to agency workers. It can apply to yourself if you're a director of your own company. As a director, brackets employee, if you're paying yourself, again, you can also work a minimum of 20% and you'll be entitled to claim under this scheme. Now, scheme number 2 is if, because of lockdown restrictions, a legal restriction which prevents your business from opening. So this isn't you making a business decision that says, actually, the income, the trade doesn't justify a full working week for my staff. Instead of making them redundant, you decide to actually play around with the rosters, cut their down times are. But if you're in a tier 3, or in fact, maybe you run a nightclub, the nightclub normally opens at 11 o'clock, and you lockdown means you've got to stop serving last orders, effectively kicking people out by 10, you will not be able to open up your premise. Therefore, you come under scheme 2, which says there's no minimum level of time the employee's got to work, which would sound, very sensible. And you as the employer would not have to make a financial contribution if you don't wish to. can if you wish to. I've got clients of mine who, under the existing furlough scheme, even though it says overall the employee must receive 80% of their normal regular wage, they have decided as the employer to top that up so the employee doesn't lose out financially. Again, that's completely discretionary, but as a bare minimum, under the job support scheme here, scheme 1, you've got to obviously make sure they work at least 20% and pay them for that time that's spent, normal wages. Under scheme 2, no employer contribution required, and the government will support that via the job support grant up to a maximum of £2,100 per month. That's the cap. Now let's come to the employer payments. Under scheme 1, what happens is for the hours not worked by the employee, the employer has to contribute 5% of that wage cost. So again, for the time not worked, effectively you might call that furlough, the employer contributes 5%. Again, you can pay more than that 5%, but again, you may take the view that actually 5% is your maximum. So that's a dramatic reduction in what the employer has to provide to top up the employee's page. Now, there is a limit on the claim, and I'll just quickly check my workings. There's lots of numbers, as you can imagine, floating around. So the claim limit under the new job support scheme is £1,542 per month. That's the maximum grant that you'll get from the government, and the employer's maximum contribution is £125 per month. If you want that in weeklies, it's effectively £356. It's the weekly cap for weekly paid employees even, and that's what the government will cap. And for you as the employee, it's about 30 quid or 29 if you want to be exact. If that's the maximum on the employer side. Well, get my teeth mixed up. So we've got that. We've got two schemes. One where you have to contribute as the employer, one where you don't. Typically where you don't is where the business through legal reasons has to shut down and therefore it can't open for business. You've got the employer contribution under scheme 1 where the employee's got to work at least 20%. Then 5% of the unpaid hours is what you have to contribute accordingly. And let's crack on. Now, a few things to add on to that. You've obviously got a claim period. And again, we've said it runs between the 1st of November and the end of April 2021. Now, here in the claim period under the new scheme, by the way, you can, as we have seen in the existing furlough scheme, what I call rotate your staff. So it may be you decide not to make people redundant, you want to keep them on your books. The pattern of your work, the pattern of what's going on in your business might be that you want some people working off, then being furloughed. You can do that. The minimum period of time they've got to work, though, is 1 week. So within that 1 week period, they've got to work at least 20% of their normal regular hours. But it's entirely up to you if you want people coming on or off. So you've got some great flexibility that's going on. There's nothing to suggest this bit has changed, by the way. You've got to pay the employees first of all. And I think with the new 5% contribution, that's going to be much more affordable. Again, I'll show you some numbers on the next couple of slides. So you've got to pay it first and then you claim it back. So again, what that means is I would suggest is that when you're making the claim, on which your agents can make the claims for you, make sure you've got all the paperwork in line. And as soon as the portal opens up for business, put the claims in early and factor in, typically based on the current furlough situation, around about 5 to 8 days for the claim to come through. You as the employer, by the way, will still be liable to pay the national insurance and the pension contributions as it has been for the month of October and the month of September under furlough. So again, that is still going to be the same. There is a job retention bonus, which I'm going to expand on later on. And the job retention bonus, just to give you a heads up at this stage here, is effectively where you keep somebody employed up to the end of January 2021 and you pay them a minimum level of money over that 3 months. then you will get £1,000 bonus from the government for each employee that you retain. The whole incentive behind these schemes, by the way, is not to have mass redundancy programs. So again, what the government is trying to do, and I have to give it due credit for setting up the scheme so quickly. It's been a moving feast. Yes, there have been quite a number of changes here, but I think if I was going to be fair, which I love to be in all these things, if you imagine the sheer scale of what's going to be done, getting the systems laid up, we've got a very fast moving reactive, we've got lots of pressure points going on, to actually have a scheme set up which can be relatively quickly adapted and put in, I think deserves some degree of praise. There's lots of things to criticise certainly, but let's look at some of the positive side. So job retention bonus, again, factor this into your cash flow planning, factor this in terms of when you look in terms of whether you can afford to keep staff, then the job retention bonus should be factored in. Now, from a commercial point of view, this is purely numbers. From a commercial point of view, staff represent a good investment for your business, and therefore, if you decide that you have no choice but to make those staff redundant, just think long term, recruiting those staff back into your business, getting the skill sets back in, could be more expensive. It typically costs 3 times more to recruit an employee than it does to actually maintain that. Again, I'm not dismissing the cash pressures, but I would certainly say don't just look at the cash in the here and now, look at the longer term perspective as well. Now, there are rules, as there are in all these things, and it's absolutely critical here, and I think there's a lot that's been missed out. There are currently in excess of, I think, about 43,000, when I quickly looked here, about £35 billion is estimated that has been fraudulently claimed or mistakenly claimed under the existing job furlough schemes. And HMRC early on this year already sent out 3,000 letters to businesses saying, can you just check your numbers, read between the lines. They, based on the information they've gathered, based on the risk assessments they've carried out, will suspect that some of those claims have been erroneously done. Just as a bit of a party pooper comment here, if you look at the first furlough scheme claims that are made around about before July 22nd, you had until 20th of October to contact HMRC to say, oh, by the way, I've made a mistake here, sorry. If you haven't done that, potentially you've got what's called a deliberate and concealed issue going on, and penalties could be levied on HMRC. Whether they will do or not is not the issue. The fact is legislation has been passed where the penalty regime is kicked in. So it's always worthwhile doing an audit, and I can flag up a couple of options for you at the end of this broadcast here. Critical, your employees can't have their hours universally cut. It's got to be done with agreement. It's got to be done with consultation. HR and employment law is not negated. It's not wiped out. It still exists. So again, make sure you follow the procedures. And the regular pay, again, is going to follow a similar pattern to calculation for the existing furlough scheme. The details haven't yet been announced, but if I was to stick my neck out, which is always good fun, then typically you're looking, excluding furlough pay, you're going to have to work out what's called an average pay. So if somebody's on a base salary, including regular overtime, normal expected overtime, you'll take an average of that. If the salary is constant, doesn't change, fine, you'll take that as a reference point, or they'll look to what it was in the previous years. Now, depending on how long you've been furloughed, it may be the same figure that you've used for the existing scheme. But again, it's this idea of using a regular pay as the reference point. Last comment on this here, by the way, in terms of criteria, this only refers to employees, so freelancers, subcontractors don't count, they're not employees. You can't count yourself if you don't have a payroll scheme set up, and you've got to have submitted an RTI scheme, or RTI claim, I should say, by the 23rd of September of this year. So any new starters after that, if you haven't run your payroll scheme yet, unfortunately, you won't be able to claim. If you haven't claimed under the previous furlough schemes, by the way, when I say previous, it's still got about 9 days to run, you can still claim under the job support scheme. Let's move on to number 2. I'm just going to have a little break here. Now, some numbers here. So this is an illustration for somebody who's weekly paid. I'm going to use the Serena as the illustration here. And what I've done across the top is assumed a regular weekly wage is £420 per week. So we've got a reference point. Now, minimum is you've got to work 20% of those hours. Now, remember, this is a situation whereby you can still open. Restrictions have not kicked in where you're legally obligated to close. So therefore, of that 420, working a minimum of 20% of those hours, that's £84 that you're going to be paying the employee. So work done equals normal work remunerated. Now, of the hours not worked, the employer contributes 5% of that unpaid wage bracket, unpaid hours. And the government contributes a very peculiar fraction. I can explain the numbers for it recently for a moment. They will contribute 61.67% of the unpaid wage. Employee gets a wage of £308. That's made up partly from the employer top up and partly from the job support grant. Now, obviously, the more hours that your employee works, the less will be the job support scheme claim, and the less is the contribution from the employer, and the less will be the job support grant. These numbers, as a heads up, obviously on these slides, on these broadcasts, if you check out the website proactiveresolutions.com, have a look at the news section on the website, and I literally updated today, literally about a couple of hours ago, these same numbers here. So they're actually on the website. Go and check them out, and it will give you the illustrations for a weekly paid employee and a monthly paid employee as well. And as we can see, certainly compared to what it was literally until before, well, yesterday, the contributions from the employer were much higher. The actual amount of time required to work was much higher as well, at about 33%. So here, I think this is a good compromise, and effectively it's on a parity, not exactly the same as the existing furlough scheme. So a good financial helpline if you're employing staff, and that might make the decision process slightly easier. But remember, factor it all in to your cash flow plan. Now that's weekly paid. Let's have a look what it would be on a monthly paid. Now, if it's monthly paid, I've taken a regular wage of £1,500. I've assumed 20% of those hours of work. That's the bare minimum. So the business, remember, you need to think about what's the income stream, what does demand look like at the moment, what's the pattern of play. Pubs, restaurants and hotels are quite used to rostering staff. If your business is an alternative time, you need to think carefully, which you should be doing anyway, about what do you expect to be happening in your business over the coming few weeks. Then coming back to see what the resources required to deliver your services, support your business itself. Again, you may make a decision that actually you're not going to do that and everybody's going to be kept on and they're going to be all working a minimum of X. Again, my process would be look at the business activity, look at what's going on income over the next few months, factor in the resources that you need to deliver that service to your customers, and then factor in what that requires in terms of resources from your staff. So let's go back to the numbers. 20% of the time actually worked is the £300 that the employee has earned for the time they've spent working. The employer, you as the employer, will contribute 5% of those unpaid wages, those unpaid hours. So that's a £60 top up per month, and obviously per employee. The job support grant that you'll be claiming for will give you £740. So the government effectively are contributing 61.67%. Sorry to be anal on this one here. I'll explain the relevance of that 61.67% in a couple of moments. The employee has a salary of £1,100, so that's £400 they lose out on. The employer top up, by the way, and the job support grant together constitute 2/3, by the way, of the unpaid hours. So that's a parity for what it was with the job support scheme as of effectively yesterday. What we've got here, we've got a shift in the emphasis of what the employer contributes and what the government will contribute. And as we can see clearly, the more hours they work, then obviously the more you get by the employee walks home with, the lower the job support grant and the lower the employer top up. Few more things here. Now, the the support scheme for the self-employed, up until yesterday, it was taking your average profits and you allowed 20% of those average profits for 3 months, capped at about just under £1,900, 1875 to be exact. That has now been doubled. So we take the average profits, we work out 40% of those average profits per month, and effectively it's capped for 3 months. The cap in financial terms is over 3 grand. So again, calculation, what's the average monthly profits? Take 40%, times it by 3 for the number of months, and that is the grant that you'll get. You'll get that paid as a single lump sum. Let's go here. You get that as a single lump sum. You effectively, that will be taxable, as one would expect, subject to NIC as well. And the actual numbers, by the way, are going to be reviewed later on. We don't know what the second 3-month period is. So this runs between the 1st of November and the end of January 21. Key thing, though, to bear in mind, under the existing self-employed grant, which runs out very shortly, so please, if you haven't claimed already and you're eligible, effectively, you've been affected by adverse conditions, make the claim, because you can't retrospectively claim back if you miss it. Tough. Under the new self-employed grant extension, as it's called, your income, your demand has got to be affected. So there's a slight difference in nuance in how the phrasing is done. So it's not adversely affected anymore, as has your demand been affected, and obviously adversely. You will need evidence. So is there something that says, yes, my business has been affected, my demand has been affected negatively? My question would be, on what basis do you come up with that conclusion? So if you've got an order book from last year, you're comparing it to this year, and you can see dramatically that that's suffered, fine, that's a bit of evidence. If you've got sales that have declined, you've got the records that substantiate it, fantastic. A lot of people, unfortunately, I'm coming across in forum and on other commentary and other broadcasts here, are claiming the grants understandably. They think, yeah, we'll check the box, nobody's going to find out. Let me tell you, my friends, HMRC will keep a careful eye on this, and they've already started inspections on quite a number of self-employed grant applications that are being made. So again, we're not talking about effectively, you know, documented evidence you present to a court of law, but make sure you've got something that backs up why you've made that claim. And again, when you actually make the claim, which you have to do yourself as the self-employed individual, then you will be ticking a box that says these are the conditions that exist. Also bear in mind, published guidance says that the eligibility criteria is going to be the same as it was under the previous self-employed grants. So typically registered 1819, continuing to trade. If your business has stopped trading, by the way, in 2021, then that invalidates the claim and there'll be a clawback. And HMRC have already started writing letters, being aware that businesses have stopped trading, and they're just following up with some inquiries. So it's demand affected, traded in 1920, continuing to trade in 2021. Right, let's look what else is going on. Cash grants. We talked about where you've had your premise closed down. There are cash grants available. The government has announced today that the level of cash support they're giving to local authorities, typically in leisure, hospitality, is going to be increased. So watch out, there's going to be some additional cash grants of £2 grand. They haven't quite given the specific details of that, by the way, but the money is being given to local authorities, and local authorities are going to make the decision as to who gets what. So watch this space, check your local authority website. Local authorities under the pressure, like all of us have been, are keeping their websites reasonably well updated. But again, the money is being distributed by by central government to local government. Local government will make that distribution. Now we've got tax gap compliance. Again, I'm not being a party pooper, are they? I'm not trying to say that, oh my God, there's detailed rules. This is money that's been given out to support businesses has been affected by coronavirus, COVID-19. Not all businesses have been affected, by the way, but many have. So effectively, HMRC want to make sure that the compliance is there. So remember, penalties have been issued already, letters are going out. So again, my view would be, if for any reason you think there might be an issue with your claims, it's not too late to do a review and an audit. By all means, check out the resources on our website, and by all means, if you want to contact me to talk it through. But I would certainly say, acting and going, if you have made an error, make the declaration before you're caught. I'm not being dramatic there, before HMRC find out, because the penalty regime will be much higher, and HMRC do have access to quite a lot of data. Right, good to know. All right, so let's round up, everyone. So here's what I was going to say. Hopefully, this has been of some use. Let me take this out on the screen. Let's put that up there. Not very polished performance. This is probably quite normal, but you know, I've literally just put this together today. Hopefully, it's been of use here. So critically, look at the scheme. Check out the website for the details. Check out the illustration. Check out HMRC guidance notes. See what's going on and plan your business for the next few months. Critically, if you can avoid it, again, I'm not telling you what you should do in your own businesses here. Staff add value to what you're doing in your business. Nobody likes to make people redundant. And if you are putting people through redundancy protocol, by the way, then you won't be able to claim under the job support scheme. Figuring out what you want to do, what's going to happen in your business, take a more positive, proactive view on that, plan it, do a cash flow, factor the numbers. Don't forget the job retention bonus. That will be paying £1,000 per employee. Now, for me, if you look at the relationship on that alone, the employer support to maintain the employment status and get the job support grant will cost you some money. Against that, you're going to get £1,000 per employee. You know, that could make it much more affordable to actually keep that person continuously employed up to the end of January 21. Take action, figure out your plan, make sure you speak to your advisor, make sure you get the advice. Watch out for advice from Dave down the pub. Dave's a great guy, but doesn't actually necessarily know a great deal about what's going on. Make sure you got good professional advice. Make sure you know what's going on. Keep that thing between your ears, fine-tuned. We are on a very resilient, turbulent time. It's not all necessarily bleak, but navigate that bleak path, if you call it that, with some information and some action. Check out the website, check out the podcast. We publish these quite regularly. And apart from that, folks, I'm going to wish you a good night now. I'm going to go home in a few moments and catch up Coronation Street. I'll leave that rock and roll lifestyle. So thank you for your time. Thank you for your company. Hit your hashtag replay, and I'll wish you a good evening.